More problems for HSBC Bank. So over the weekend, the People's Bank of China, or PBOC, which is China's central bank, they decided that they were going to change the way bank loan rates are set, and they left HSBC Bank out of the rate setting club. The story is from the South China Morning Post by Zhao Xin and Pearl Liu from August 17th of 2019. And let me continue with the story. The People's Bank of China is attempting to lower financing costs for corporate and individual borrowers. They want more credit flowing through the Chinese economy. As I've talked at length, that is probably not a good idea. I just saw a new chart that showed that China had almost 100% change in debt to GDP, the largest of any country, major country in their economy for private sector. Let's see here. The chart is from Group of 20 non-financial private sector credit and debt service ratios, change in debt to GDP from 2006 to 2016. China had the largest change of any country, almost 100%. So that's change in private non-financial sector debt and debt service ratios. And yet the People's Bank of China and the Chinese government are trying to force lower borrowing rates and more credit into the system. So back to this South China Morning Post article. And by the way, guys, you're not going to hear this from the Western media. There is no negative coverage whatsoever of any of the stuff that is happening about HSBC Bank, all the smoke going around, all the rumors circling. There's even another rumor that HSBC may have been involved in helping get the Hong Kong protesters financed through the US and the UK. So that rumor is going around that they financed this. The Chinese government, at least, it sounds like, or people in mainland China are claiming that the HSBC Bank may have helped finance this. So there's all these different and often conflicting rumors, and some of them may be true. Back to this article, though, China has changed its system for deciding bank lending rates so that the central bank can effectively influence and control interest rates, a significant move in the world's second biggest economy. The change, part of China's long-standing pursuit of a market-based central banking structure, comes as the country's economic growth is losing steam amid a protracted trade war with the United States, and as Beijing seeks to cut financing costs for struggling small businesses. Under the new system, a club of 18 lenders selected by the People's Bank of China will submit their 1-year and 5-year loan prime rates, or LPR, the lowest rate offered to their best clients, to the central bank on a monthly basis, the PBOC said in a statement on Saturday. The central bank will calculate the average of those rates and publish it at 9:30 a.m. on the 20th of every month, starting from Tuesday as the benchmark rate for the whole banking industry to follow. It said the rate-setting group had been expanded to 18 from an existing group of 10 big banks to, quote, make the group more representative, end quote, by including foreign banks, rural commercial banks, city commercial banks, and even private banks. The foreign banks are Standard Chartered and Citigroup, according to an interbank rates website run by the PBOC. HSBC, which has the largest asset scale and number of outlets among foreign banks operating in mainland China, was not included in the rate-setting group. I wonder why. There is a lot of smoke, a lot of rumors. Some of them how the Chinese government wants Ping An Insurance to do a hostile takeover of HSBC. Others that the Chinese government wants to retaliate and destroy HSBC because of their role in Huawei, and how the Huawei CFO was arrested, and how HSBC supposedly violated customer agreements because they were facing criminal charges from the U.S. government, again. Analysts, and so they saved themselves, and they threw Huawei's CFO under the bus. Analysts said the omission of HSBC was conspicuous, but it was too early to say why it was left out of the group. It's really funny how the Asian press and the Chinese press will at least talk about some of the rumors, whether it's the Global Times or the South China Morning Post here. They will at least discuss some of the rumors, but the Western media, guys, the Western financial media, the mainstream financial media here in the U.S. and Western Europe, and then also the mainstream media will not touch any of these rumors. There was even a story from Reuters about the change in new lending benchmark rates, and guess what? HSBC wasn't mentioned at all in the article. Isn't that funny? So you have a Reuters article that came out about how the PBOC is changing the rates, is changing the new lending benchmark on medium-term rates. They're trying to spur small business credit and small business lending, and not a single mention of HSBC Bank in that Reuters article. It is, I don't want to get too conspiratorial here, but it's very curious how HSBC, who pays a large amount of advertising to Western financial media, and they're not included, no negative coverage whatsoever in any of these articles, no mention of the rumors. Kyle Bass's, and this is even more curious, if you go to the Yahoo Finance interview that Kyle Bass did, the original Yahoo Finance interview that Kyle Bass did early in August, it was 13 minutes long, and he talked about the HSBC rumors, and guess what? Yahoo Finance cut that part out from their YouTube channel. It is gone. It is gone. The original 13-minute interview, I put a link to it in the Wall Street for Main Street Facebook group there from the beginning of August, where Kyle Bass talks about how Chinese banks, the big four Chinese banks, could be removed from SWIFT. And then also he talks about HSBC Bank and some of the rumors going around. And then magically those things are removed from Yahoo Finance's Kyle Bass interview. Scratching my chin here. Very interesting. So no, I'm guessing here, I'm reading between the lines, there is no negative coverage whatsoever allowed of HSBC Bank in the American and European financial media, mainstream financial media. Okay, so back to this article from the South China Morning Post, because they're actually covering this pretty decently. Especially compared, this really good coverage actually compared to the mainstream financial media here in the West. So HSBC Bank was left out. Analysts said the omission of HSBC was conspicuous, but it was too early to say why it was left out of the group. Kenny Tong-Sing-Hing, chief executive of Royston Securities, noted that HSBC was the largest bank in Hong Kong. Quote, "It's not a surprise to see HSBC being left out considering what happened with Huawei earlier. It's been widely speculated that this is related," end quote. By Kenny Tong-Sing-Hing of Royston Securities. So the Eastern press is talking about this, about how HSBC, a lot of people in mainland China are very, very upset about HSBC playing a part in the charges and the arrest of Huawei's CFO. But you really don't read it at all in any Western media. Quote, "When thinking about foreign banks in China, HSBC should be ranked before all others. This will not have any actual impact on HSBC's business, but not being included is more like a symbolic move," end quote, Tong said. Yeah, symbolic move. I think he's trying to be political here and careful with his responses. I think he knows that there's a lot about a lot of the other rumors. And then the other quote is about Huawei. So HSBC played a key role in the United States' attempt to extradite Huawei Technologies executive Meng Wanzhou from Canada over allegations of bank fraud and breaching sanctions against Iran. And then also I think there was intellectual property theft as well, but I guess that might be a lesser charge. HSBC has said it provided information as demanded by the U.S. Justice Department. And so China is saying that the Chinese government and many people inside mainland China who are angry with HSBC Bank and want the bank put on a blacklist now are saying that they should not have listened to U.S. Justice Department requests, that they violated customer confidentiality agreements to protect themselves and the bank. Clement Chong Cam Wing, managing director of accounting firm BDO, said it remained to be seen whether HSBC would be permanently excluded from the rate-setting group. Quote, "We're not sure what the exact criteria is, and it's difficult to say why it wasn't included this time. But considering that HSBC is quite active in China, it could still be included later in the second or third round of selections," end quote, Chan said. Yeah, or HSBC could be blacklisted or killed or blacklisted or bankrupted or hostile takeover or some other thing. There's so many crazy rumors that have some at least some validity to them that are floating around about HSBC Bank. It's freaking nuts. And of course, the mainstream media doesn't want to report on any of this. Mainstream media in the West. Not even Reuters there in that piece. That's actually the only article recently I've seen about any mention of HSBC from a Western. That's even actually, there was no HSBC mention, sorry. The Reuters article at least talked about the PBOC, but there was no mention of HSBC. Okay, quote, we're not sure what the exact criteria is, and it's difficult to say why it was included this second round, third round selection. Chan said I reread that accidentally. Sorry, guys. The next system will weaken the role of the official benchmark rate set by the central bank, a legacy from China's planned economy days when Beijing arbitrarily decided interest rates by delegating the price-setting power to the 18 chosen banks and lower financing costs for Chinese corporate and individual borrowers, the statement said. The group also includes online lenders WeBank, owned by Tencent, and MyBank, backed by Alibaba Group, which also owns the South China Morning Post. The PBOC did not specify the criteria it used for selecting banks to be part of the rate-setting group, but the statement said it would assess and review the number of banks. Although it is not part of the LPR group, HSBC remains one of the 16 banks and the only foreign lender providing price quotations for Shibor, the Shanghai Interbank Offered Rate for short-term loans, China's answer to the benchmark LIBOR for major global banks. HSBC said in a statement that is committed to the development of China's financial markets and welcomes the new lending rate mechanism in China. Yeah, it sounds like a PR statement. Quote, we have participated in many initiatives to enhance the efficiency of financial markets and will continue to seek opportunities to contribute to financial sector reforms. The bank said, in the new system, the 18 banks will submit their LPR in the form of an open market plus a rate plus spread, or a rate based on the bank's borrowing rate from the PBOC plus the minimum additional rate for its best clients. The central bank will then disregard the lowest and highest rates and calculate an average of the rest to be used as the nationwide benchmark. Banks have been told by the PBOC that LPR must be used in all new loan agreements, a major change from the existing practice where all loan contracts in China use the official benchmark rate. The one-year benchmark lending rate is 4.35%. According to the central bank, there has been an unwritten rule in the industry for lenders to reach tacit agreement on a floor rate, which is often set at 90% of the official benchmark rate. Hua Changchun, an economist with Guotai Junan Securities, said the move was expected to make it easier for changes to interbank market rates to flow through to banks and businesses in China. Quote, the new system will help to unclog the channels between monetary policy and the credit market, and quote, Hua wrote in a note on the policy move. There's also an interesting article here from ecns.cn. I'm not sure what the regular name for that is. That's what the website is. It says PBOC interest may reform, PBOC interest rate reform will spur small business. So they're hoping that borrowing costs will get lower for companies in China starting Tuesday. And let me see here if HSBC was mentioned in this article. I read it. I can't remember. Yeah, it wasn't mentioned. So surprisingly, HSBC not mentioned in that article either. HSBC is a very big bank in China. They have a very long relationship with Hong Kong and Shanghai because that's its name, if you're not familiar. Someone was asking earlier on another HSBC video I did, what does HSBC even mean? Hong Kong Shanghai Bank. Isabella says HSBC is at least as criminal as Deutsche Bank. It's in different ways. Deutsche Bank got more involved in derivatives, and HSBC appears to be more focused on money laundering, in my opinion. No, I wouldn't. Wow, this is not financial advice, but I wouldn't max out a mortgage and hope for a debt jubilee. That is not sound finance. That's not sound finance. You don't want to go max out your credit cards and hope for a bailout like that. The people in Canada at JP Morgan Chase got lucky. That JP Morgan Chase decided that they wanted to reduce all of their exposure to Canadian consumer, Canadian credit markets, and just do a write-off and wrote off all the bad credit card debt. That was luck. That was maybe once in a lifetime type of luck. It looks like gold is pulling back, Andrew. Hey, thank you for the super chat, Kyle. I appreciate it. Yeah, Kyle, there's so many rumors floating around. There's at least 4 or 5 very interesting HSBC rumors, and there's credibility or validity to all of them. There's at least parts of credibility or validity to all of them. The Thomas from Norway asks, what is the PBOC? The PBOC is short for the People's Bank of China, which is China's central bank. And I saw in the comment section debates about what China's central bank does. It allows for fractional reserve lending. So it creates reserves for the larger banks, China's big four state-owned enterprise banks and other banks. Normally the smaller provincial banks, the commercial provincial banks, and they try to set reserve ratios for fractional reserve lending. Unfortunately, the Chinese banking system is massively over-leveraged with a lot of dramatically overvalued real estate and bad assets and bad collateral. And that's why you had the problems starting in May with Baoshan Bank, and after that, when creditors got up to a 30% haircut from Baoshan Bank, then that created the interbank lending problems. So there was a lack of quality and quantity of collateral within the Chinese banking system. I don't know all the details of the HSBC founding. Do problems in China have anything to do with U.S. politics, or do they? So the tariffs are being, this is an excellent question, Thomas. The tariffs are being blamed, and the tariffs are hurting certain Chinese manufacturers. They are becoming less competitive, and also China is losing factories. Factories are moving out of China. So factories are leaving to more developed countries. Those are being more automated, but then the cheaper labor factories. First of all, China has had an increase in wages for factory workers. I think it's up over 500% in the last 15 or 20 years. So that was part of it. There were already some factories, a good amount of factories leaving China, but the amount of factories leaving China after the tariffs have increased has increased. So there, a lot of the cheap labor is leaving China now because the wages are up, like I said. So a lot of the cheap labor has went to like Vietnam, Sri Lanka, I think Pakistan. There's other countries. So, and then there's like the drone company, the Chinese drone company. I think it's what JVL. And they announced recently, after the last round of tariffs, that they're moving their manufacturing facilities out of China. So those may not come back for a decade or ever. So there are companies that are leaving China permanently due to the tariffs. There's also a lot of xenophobia in China now towards Americans. The U.S. has stagflation too, Kyle. The U.S. is lying about its real inflation rate. Haven't you noticed that you're getting less for more money at the grocery store, at Target, at Walmart, and at restaurants? You're getting less for more. Or quality of goods for food and stuff is being substituted out. Automation is already hurting China. Foxconn moved a plant to Wisconsin. So automation, there's going to be less jobs available for cheaper manual labor in China because what China's attempting to do, Thomas, is China's attempting to copy Japan and go from making cheap labor manufacture goods to higher value-added manufacturing, similar to what the Japanese transition did. So China's attempting to do that. China's trying to do it on a larger scale and faster than it took Japan. So I just wanted to do this update for you guys about HSBC Bank. This article from the South China Morning Post is saying that it's a symbolic thing, but I think behind the scenes there's a lot of turmoil. The shares of the bank have rallied a little bit in the last couple days. The shares were kind of starting a free fall, especially since May of this year when the shares were as high as $44.70. And the shares, the chart there, the steepward downward decline on the HSBC shares on the New York Stock Exchange, it really started to accelerate in the decline on July 23rd. So it went from $41.65, and it got as low as 36 before it had a little rally. But that could be a dead cat bounce in the chart. So someone, and I've heard rumors of this from people listen to this podcast and send me emails. smart people who are, let's just say, not fans of the Chinese government, and they are telling me that retail traders in Hong Kong and mainland China are short HSBC bank shares. So it's a rumor for now. Obviously, it's not being covered in the mainstream financial media here in the West, but there are a lot of people in mainland China who are very, very upset with HSBC Bank. And that means they could lose a lot of business then in China. Probably a lot less depositors, probably a lot less businesses. China, Koi Cities asked, China's plan was to steal IP and make products for themselves. So China was producing, they were manipulating their currency 15 or 20 years ago. That's when the majority of the currency manipulation was occurring. And they were manipulating their currency with the dollar peg. And then they were manufacturing very cheap goods, which a lot of corporations wanted because it meant more earnings and more profit margins. And then they were earning dollars because they desperately needed dollars to buy food, buy energy, buy commodities. So they needed those dollars. And then they built up, they went from almost no reserves and no trade surplus to over $4 trillion at one point in like a 15 or 20 year span. So they grew that out. And along the way, people were like, oh, China's stupid for giving the US treasuries. But along the way, not only was China providing more workers with manufacturing jobs and building out an industrial base, and they were doing some good things like some good infrastructure, but they were also stealing intellectual property. So there was many reasons why China was doing the things that they were doing. So people were like, why would China, manufacture all these cheap goods? There were a number of reasons why. There was forced technology transfer. There was theft of intellectual property, theft of research and development for free. There's research reports out that hundreds of billions of dollars per year, there's ranges from like $200 billion up to $600 billion per year in intellectual property and research and development has been stolen for many, many years, over a decade. So I've seen one estimate that over $5 trillion worth of research and development and intellectual property has been stolen by China. Dark pool footprint of shorting HSBC. I don't monitor trading volume on the Chinese exchanges though. In the short term, I don't really care. The gold price in the short term doesn't matter. The policy decisions of these stupid central bankers with talking about negative interest rates, talking about more rate cuts. President Trump is probably not going to get his 100 basis point rate cut. He'll probably settle, like one of my other listeners said on yesterday's live stream in the live chat section. He was predicting that Trump was asking for 100 and would settle for 50 basis points. But all these banks, all these governments and central banks, the reserve banks, they all want a weaker currency. They all want to do rate cuts to take the rates down as low as possible, to zero interest rate policy first, and then negative interest rate policy after ZIRP. Zero interest rate policy or ZIRP, and then negative interest rate policy or NIRP. NIRP is a lot more open. Hi, Dean. I think automation will hurt China. Their domestic economy is struggling. They've had a big increase in amount of household debt, and a lot of it is on speculative mortgages and also auto loans and credit card debt. And their per capita income is much, much lower than many other countries. Yeah, I think so. It benefits the Chinese government in power, the Communist Party of China. It benefits them to blame all the problems with the economy on Trump, President Trump, Americans, and the tariffs. When in the reality, the problems in China have been happening for the last few years prior to Trump even winning. China's economy was massively overburdened with credit, and it was predictable that this credit bubble that their economy would hit a wall with misallocations of capital, trillions in misallocations of capital, a lot of bad credit, dollar-denominated debt, and so much of their GDP and economy is based on speculative real estate. And there's a lot of people in China that have mortgages on real estate, and I'm using air quotes, investments, and these investments are just empty concrete shells. So they're an unfinished building, an unfinished apartment, an unfinished house. They're literally just an empty concrete shell. And that's looked at as an investment by many Chinese. And they have the very same false assumptions that Americans had prior to the 2008 housing bubble collapsing, was that real estate prices only go up. I don't know if we can have a debt jubilee, JBS. There's a problem with that because the debt is held as an asset. So what's one man's debt is another man's asset. So because people are relying on the interest payments on that debt and a growth in principal in some cases. So if you do a debt jubilee, you have to make the holders of debt, you have to give them something. You can't just wipe them out, because then that'll create a bankruptcy cascade, and that will collapse the economy as well. Yeah, there's many ghost cities in China. They're still building. Go back and listen. If you're new to my channel, if you're not one of the 100 Patreon account contributors yet, if you're new to my channel, go back in the archives from 2 months ago and listen to the Denny McMahon interview from China's Great Wall of Debt. He lived in China for over 10 years. He speaks fluent Mandarin. He's from Australia. Excellent interview from Denny McMahon. Excellent book. You can get it on audiobook, China's Great Wall of Debt. And he documents in there how the speculative real estate bubble, ghost cities, all the crazy dummy corporations that these local governments set up to borrow, to defy Beijing and borrow crazy amounts of money that they knew they couldn't pay back. I haven't spoken to Mo in over a year. Mo and I are not on speaking terms. We're not on good terms. So I would know. And then when I did speak to Mo last year, I don't want to go into it, but it was not a good situation. Okay, guys, well, I think that's it for this update. I just wanted to do a short little video here. I'll attach links to the stories if you want to take a look at these and read them more. But thank you to my 100 Patreon account contributors, and also to my half dozen or so on PayPal. Everyone have a nice day, and if there's any more stories, I may come back and do another live stream show or short video or something. Okay, bye.